All right. Hi, everyone, and welcome to this week's BFM Personal Finance webinar. Today, we're taking a look at at what circumstances should you be surrendering your insurance plans in a tight cash position. Now, my name is Roshan, Kanesan, and this BFM Personal Finance webinar is done in collaboration with the Financial Planning Association of Malaysia. And as I mentioned, we're getting into the specific point on at what point do you think about surrendering your insurance plan, the merits of doing this, the alternatives, and ways to keep yourself protected. Now, to help me with this conversation, I'm speaking with licensed financial planner Kevin Neoh, Paul Loh, CEO of Etiqa Life Insurance, and Malek Ali, founder of BFM Radio and filife. Now, if you've got any questions, please feel free to ask them in the comments section down below. We're more than happy to take your questions, so please let us know what's on your minds. To the three of you, thank you so much for joining me today. This evening, it's 8 p.m. Let's not take this conversation too long. Kevin, let's, I think, start from a financial planning point of view. Should you surrender your insurance policy if you're in a cash shortage?
Definitely, I would say that surrendering your protection plan is the very, very last solution to anyone, because you got to remember in the beginning of the day, you agree to get this protection product for a purpose. And if this purpose still remain relevant to you today, then I guess you should really work very hard and find ways to get over this challenge instead of taking the easy way out, which is to cancel this plan so that you can have a relief in terms of your cash flow. So my basic advice is that if you still need it, then just don't just give up on it. Find ways to get over it first.
Right. Now, I think we'll probably dive a little further into that, because end of the day, we want to take a look at the alternatives as well, right? Because right now we're talking about people who are in a position where cash is going to be an issue. But before we get into maybe some of your thoughts on the alternatives, Paul, let's take it over to you now. What are your thoughts on this? Should you ever think about surrendering your insurance policy in a cash crunch?
I would definitely strongly discourage. And the reason is, if I may use an example, if you have a money printing machine in your house that will print 1,000 ringgit a day, and this machine can be stolen, it can be, it can be broken. So, but it happened that this printing machine also can be insured. So, will you buy insurance on this money printing machine or not? Unfortunately, we are like the money printing machine, unfortunately. So, our family, our kids, okay, our wife and spouse all depend on us. Okay, so I understand. Okay, in this kind of situation, okay, things are tough. Okay, so we think about, let's say if I do have a crash, so-called cash crunch. Okay, so should I cancel the policy or surrender the policy? But bear in mind, as what Kevin just said, okay, the reason why we get married, we have a family because of love, and also, and the reason why we have kids because of, we owe them a responsibility. So I would strongly urge, okay, not to cancel the policy in this kind of time. Yeah.
Right. Before we get into the alternatives, Malek, do you have any thoughts on this? I know you were personally quite, whenever we talk about insurance, you always have a thought or two there. Will you want to chime in on this?
So I think what it doesn't preclude, I mean, of course, I think protection must always be there, particularly if you have dependents. That is no question. The question is whether the policies that you have, whether you might need to review though. There might be opportunities where you can review your policies and actually say, hey, you know what? I actually bought this policy for protection as well as maybe an investment, right? So maybe I can right now, protection is important. My investments, I can maybe do that for another day. I can save that for another day. I can focus on my investments on another day. Maybe there is an ability to kind of, in a way, review your position so that your protection actually doesn't go down. In fact, it might even go up. But you actually then look at the insurance in the investment side of things and say, hey, can I do this better, or do I need this now? Is this in priority right now? cash is more important to me right now. I have a mortgage to pay. I have these bills to pay. Maybe I just step back a little bit on my review my policies, so I can step back a little bit on my investment part of my policies. And maybe but still maintaining what Paul said just now about protecting, making sure that you as a breadwinner have an income. If something were to happen to you, your family still has a lump sum where they can actually keep them, for their living expenses. So I think doesn't preclude reviewing your policies, and maybe for those that is very sort of investment oriented, there might be a case for surrendering your policies. Of course, not as your first port of call, but if things are desperate, maybe that might be a good way forward.
So I think the common theme amongst all three of you is the fact that this shouldn't be the first thing you go to, right? I guess there is a hierarchy here in terms of where do you go to free up some cash when you're in a pinch. So I think let's get into that. I think we generally talk about setting up budgets and thinking about how we can cut as much of our expenses as possible. Kevin, I think you were about to mention something a little earlier about the alternatives. I think let's start with you. What are the alternatives before I get to what I think, based on the conversation, is really the most, it's the last option is to cut surrender your insurance policies.
Thank you for asking that, Roshan, because it helps that people out there should be aware that there is always an alternative. Of course, every time most people are likely to say that there are needs and wants, and people are likely to associate insurance as something that you need more than what you want. But in fact, if you look at your insurance policy, the portfolio of your insurance policy, there might be a chance that you can also differentiate them by needs and wants. So there are policies that you really need because you have dependent who depends on you. You are concerned of certain risks. For example, your whole family have a track of history with inheritable diseases. So if you are concerned about that, those are things that you need. Therefore, it should be the last thing that you even think about cutting it off. So before you get to those stage, you can look at your policy. Certain insurance policy or protection plans, they're bound to have cash values accumulated under the plans itself. So for example, if you are having a traditional products, those products actually accumulated certain cash values in the policy that as a policy holder, they may not be well aware about those money even existed, because maybe when the first day you buy, you were thinking that you want to cash out at the maturity date of those plans. Therefore, you might have forgotten that there's actually accumulated cash value there. And then if those policies are what we bought for, let's say like savings purpose, there could be survival benefit also accumulated inside the policy account that you may not aware of. So what you should do, the first step is to first, like anything in life, before we throw it out, we first take stock, understand what we have first and what are our rights and obligations to those things that we have. And the first thing is to ask your insurance consultant or just call up the customer service to ask if your plans have any values with it. If there is, then you can have actually many ways to go about it before you come to having to cut it off. Yeah.
Okay. And I think, Paul, before I get your opinion on this, more important question has come up on Facebook. You know, that money-making machine that you were talking about earlier in that analogy, is that available on Lazada? We have that question on Facebook from Roshan. I think
I wish.
I want to know where it is.
But unfortunately, we are the money printing machine. So we are, as a head of household breadwinner, we are, yeah.
Yeah. So, Paul, let's get your view on this then. What are the alternatives before I get to a point where I really, really have to surrender my policy here? Because it really is, it really sounds like that's the last thing that you should be doing, right? Because at the end of the day, you do want to keep yourself protected. What are your thoughts on this? What are the alternatives?
Yeah, it's very unfortunate that we live in this unusual time. It only happened in probably every 100 years. It just happened that we encountered this COVID-19. So under this unusual time, we need to take unusual step. So I will encourage everyone to do an unusual budget, okay, because we're all facing difficulties. And as what, you know, the other two speakers like Malek and Calvin say, okay, that I think we should, okay, consider keeping the policy to protect our family. So I would say, okay, I think we need to prioritize, okay, what is really important to us, okay? Once we have the list of the prioritization, then we know, you know, which is the least important to us. It's probably not what we need, but what we want, then we can cut it off. Okay, and also, okay, whether, you know, in this kind of, you know, nowadays, okay, we have a lot of online thing, you know, delivery, whether we can earn extra income, okay, to really sustain the family. So I think we have to be a little bit creative, but at the same time, okay, we cannot forget to protect our family. And family is very important to us, okay, that's why we have family. So as what Calvin pointed out, okay, in certain policy, okay, which allow you to reduce the sum assured, certain policies, not all right? And also, okay, like investment policy, if the cash value is sufficient enough, then the cost of insurance is, you know, is sufficient to maintain the sum assured or the face amount, then you can continue until the money runs out. So don't take drastic action. Check with your agent, check with the consultant, check with the company before you take any drastic action. Yeah.
Right. So I guess you're of the opinion that you should be keeping your protection as long as you can. And let's say you really are in a dire strait. You're really cash strapped at this point. You've done the budgeting. You've done, you know, you've got no job at this point. Things are really tight, because we've talked about this on the webinars before, the needs and the wants, and having to get that budget and tamper down on your cash flow, the leakages in your own cash flow. So push comes to shove, you're really in a tight spot. What are your options there? Because I know it's in an ideal world, we want to keep that insurance policy to protect our loved ones and ourselves. But what are your thoughts there?
Certain companies that do offer premium deferment, like Etiqa, my company, we allow, okay, if you are really in a difficult situation, you can apply, and then we allow you to defer the premium payment until end of this year. So at least, okay, you have a few months, okay, to manage your finances, okay. So then next year, then you can stop so-called your premium payment again. As you know, if you do that, okay, at least, okay, your policy is being enforced, you know, for the next few months. So then next year, then you can work out some kind of so-called, if you do have Maybank credit card, then we can work out the easy payment for you to continue the payment for next year.
Right, so I guess that's just like one is the deferment, and the other one is the restructuring of the premium. So again, these are just ways to stretch out that payment. But I think let's throw this to you, Kevin. Now, in that situation, dire straits, no cash flow coming in, you really have to reprioritize your situation. Should you? What else do you do before you get to the surrendering of the policy?
I guess it's fair to say that it has to go back to the mindset of the person who is in the situation. Premium deferment, it's a very good thing to have. We are blessed that these kind of things are being provided. However, it only helps you to solve your short-term issue. So if you have got this resolve, and then your mindset go back to focusing on your current situation, and inside your comfort zone, you're never going to think about how do you want to make some changes to your life, then I'm afraid that after the few months later, when the deferment program has ended, you are actually back to facing the music, and you are back into the same situation. Therefore, I think that the main thing is back to the mindset of the person. You see, it's normal that we see when we go out nowadays, cafes and places that encourage people to spend money for things that they want is still actually quite crowded. So these are things that for us to really knock on the head, you have to review how you live your life. If you are really having a dire strait situation facing you, or on the way when the loan moratorium ends after September, you really have to start doing everything, restructure your whole financial habit and lifestyle today, not until beginning of October. It would already be too late to do that. And if you to do your budget is very simple. To a lot of people, budgeting means they pull out a piece of paper, they write how much they earn and how they spend. But I think you should actually level up one notch. You should get someone you trust very much, who you are not afraid to share your fear and your hope with, to do this budgeting exercise with you. Because what you need is not to write down the number and add and subtract it. You need someone to challenge you on things that you think very important to you. Is that really very important to you at this juncture of time? Especially when you are not so sure whether you will still have your rice bowl a few months later, or you can feel the problem is on the way. You should get someone who is not afraid of challenging you to rethink your habit. And also you can review something like your subscription, your internet TV, your whatever music sharing program. Review those things. Is that really something you need, or to protect your family or your loved ones? Okay, that's what I want to add. I'll pass to you, Malek.
Sorry, I'm just asking, Kevin, are you the kind of financial planner that challenges the clients on their on their budgeting? Are you the kind of financial planner that says to the client, hey, you really need this, huh? Are you that type?
What I'll do normally is that I will go through a goal setting session with the client. So we want to understand what are things that the client really values. Sometimes we value family and security, but we may be enjoying our life as well. So in that sense, there's a conflict of values in terms of how we spend our money as opposed to what we really treasure and value. So in that case, I would not hesitate to point out to the client, you are telling me you prefer to do A, but you are actually doing B. So help me to understand, how does it make sense to you? So that will allow the clients to have a moment of silence with himself or herself. They will think it through, and by that time they agree to change their lifestyle and habit. Is the best thing you can ask for, because you cannot force someone to change if the person do not think that he or she needs to change.
Yeah, I think that's the common thread when it comes to financial planning. One of the things is that we often say something but actually do something else. It happens a lot. I mean, even the best of us get into that sort of situation. But I think there's also just an element of people who are in truly like dire straits, right? These are not the people who are in the cafes, where maybe the idea of paying that insurance premium that they do, whether it's on a monthly basis or annual basis, that's quite a bit of a percentage of their cash flow, right? So I think now we're going to get into the way you should go about it. If it comes down to that cutting or surrendering your insurance is the only option left. You've done all the needs and wants. You've done your budget. You've cut everything you can cut. You've got no more Netflix in your life. You've got no more Spotify in your life. You know, you stop going to cafes already. The only thing you're paying is the mortgage over your head and the higher purchase loan you've got out there. Maybe that one also you've given up on, right, at this point. So really, it's coming to the I guess the hierarchy of what's the opposite of hierarchy of needs. I guess the hierarchy of desperation. I think this is what Malek coined a little earlier. Now, if you've got any questions, please feel free to ask us in the comment section down below. We're more than happy to take them on as this conversation progresses. And if you've just joined us on this BFM Personal Finance webinar, this is done in collaboration with the Financial Planning Association of Malaysia. And today, as you would have, I think, got the gist of what we're talking about, in the event that you're in a cash crunch, at what point you start thinking about surrendering your insurance policy, if that's something you have with you. Now, joining me on this conversation, Kevin Neoh, licensed financial planner with VKA Wealth Planners, Paul Loh, CEO of Etiqa Life Insurance, and Malek Ali, founder of BFM Radio and filife. Gents, let's talk about that level now, where surrendering your insurance policy is your only option left. How do we go about that? Kevin, let's start with you.
Before that, I just wish to point out what's usually, based on my observation, most people, they don't really know what's their flexibility when it comes to managing their insurance policy. So to them, it's really, maybe this is my only choice. So I just want to point out that based on your question, a person should have really done all reasonable exploration as to the options they have. Then if it comes to the point, it means you really have to cut it. then I would say you have no choice. You really have no choice, but you want to cut it, then just go ahead with it. But before you do that, you just have to, maybe it's best to consider, if you still need the protection, but you really got no choice, then you should actually consider a very cheap alternative. At least when you cut it off, you are not totally naked in terms of protection. You still have something. So most of the time we are buying insurance that we are paying, investment link, traditional. It's very unlikely that you are having a term insurance that covers pure protection, plain vanilla product. So if you really have to let go of all other protections you had, then at least get a pure vanilla term protection, so that if something goes wrong, your families are not going to totally be left alone facing another catastrophe. Otherwise, you will be actually solving one problem, but you are actually planting the seed to another bigger problem.
Yeah, I guess it's not, it's very important to highlight that, right? Because I think it's very clear from the conversation so far, we've emphasized that this is really your last ditch point, because you don't want to essentially surrender future protection for you or your family at one point where you are, well, for all intents and purposes, you're desperate at this point. And just to say, you've got to look at all your other options, right? So I think Paul highlighted deferments earlier, restructuring the plan. These are all different things that you should take into consideration before you go to this last option. Paul, do you have anything to add to Kevin's points over there?
Yeah, I think insurability means whether you're insurable or not also very important, because now you are healthy, and that's why you are able to buy policy. So in case if you lapse a policy and then you try to buy it back later on, what happens if you are not insurable? That means your health is no good. That means what you are not able to buy any more insurance policy. So got to take that in mind also, okay? Yeah, and then as what Kevin said, pure term, which is good. If not, then you can buy a PA, at least cover accidental death. So those kind of things, you have to protect your family, because it's your family, and the reason why you get married, have kids, because you love your family, and you owe them a responsibility.
Right, and I guess that option where we're talking about here is also downscaling in the event that you need to, I guess. Getting the barest essentials when it comes to protection. Malek, again, you're the insurance advocate when it comes to the BFM office. But what are your thoughts on this?
Yeah, so for me, yeah, I think the protection is important. I think even, can you imagine if you're like, you're out of, you don't have protection, and then, not just COVID-19, but something happens to you, and it's a double whammy, right? You can't, then you don't have anything at all to give anyone, or, you yourself need to be taken care of, your family needs to be taken care of, and no one has any resources to do that. So I think protection is really important. And yes, there are options out there where you can just buy that plain vanilla term life insurance, which is actually the cheapest on the market. Keeps you protected, doesn't give you any more other than that. There's no cash value to it, etc. But you can at least get that protected. And I guess that's why I've started this organization, this thing called filife, which actually just focuses on that, focus on that pure plain vanilla protection. However, I must say also, I guess in this sort of scenarios, I'll give you also another example. I think there's a lot of folks that actually bought policies, but they've never really gone into the details of those policies, right? And then maybe they've bought one, maybe they've bought two. And I know that some affluent people actually buy more, right? There's like 4 or 5 around. So I think the first thing first, I think a good way of, if you're in a cash crunch, and even people with 5 policies can come into cash crunch. Their businesses might not be doing very well. They don't get dividend income anymore, etc. I think it's good to talk to an independent financial planner that will help you just sort of surface all the policies you have, review them, figure out which are the ones which are core and important, and which ones are a little bit more like, no, you don't need to have them now, right? You can postpone this, or you can surrender this and then come back to fight another day, right? Kind of thing. You can get other investment instruments when things get better. So I think it's important, if you have bought policies and you don't know the exact details, you just vaguely know. I've met so many people who just vaguely know they bought something, and you ask them specifically what have they bought, they actually they're not quite sure, right? I think I bought this, I think I bought that. And then when we actually ask them, hey, can you look for the policy? They don't even have the policy. They don't know where it went. Yes, it's not kept safely. So I think it's really important as a first step. Spend a little bit of money. I don't think it's a lot, but I think some financial planners out there are willing to, during this really tough times, just kind of offer at least a first conversation, and just sort of bring with you all that you have, all the insurance policies that you have, and say, hey, I don't know what I bought, or I need some advice on this. I have all these. Is there anything that I can salvage, or anything I can reduce, or anything I can restructure because of this policy? So I think it's important to get some independent financial advice.
Yeah, Kevin.
I mean, very well that I agree with what Malek has pointed out. I think this time is also something that made us to wake up and aware that maybe I should do a complete review with my collection of insurance policies. Just a couple of weeks ago, I have met someone who brought 2 bags of insurance policy, 2 full bags of recycle bag, big one, not small one. So we went through a review, and eventually we found that there's a lot of policies that cover essentially the same thing, which is in the event of hospitalization, this person can receive a 100 or 150 per day. And these are things that she has been paying for. And we found out that these are not really the thing that you need, it's the thing you want. So if you want to cut, you should cut these type of things first. These are maybe like fats in the body. You should cut this one first.
So I guess when we've gone down that hierarchy, right? So one is, okay, don't touch any of the insurance yet, like look at your needs and wants, where can you cut first? But even within, when you look at your policies, there are needs and wants here. And I think Kevin's example really highlights that. And Malek also was pointing to that there are, you're not sure, because I think it's not uncommon for us to know people or have friends who are unsure what their policies are, right? They just buy the insurance policy and then not sure what exactly it covers. And so within that, there is also just that hierarchy of taking a look, analyzing it. Maybe there are some things that are easy to give up and free up some cash flow there. Yes, Malek.
Yeah, I'm just going to highlight some questions from Facebook. And I think the conversation has, when I look at Facebook, the conversation has widened a little bit, for example. And I think this is a thing that Paul can answer. Paul is in a good position to answer. From Jason Poo, would you think that insurance companies should provide a COVID discount for current policies? I'm not sure what COVID discount means, but let's talk about COVID and how current policies are covering COVID. Do they or do they not cover COVID? I think there's a question for Paul, I think, given that he's from Etiqa.
Okay, it's a good question. Okay, during this unusual time, okay, as a good corporate citizen, we also play our role. So for those policy holders who are with Etiqa, if they suffer and diagnosed from COVID, we do pay them 5,000 cash relief. And let's say if they are also our medical client, again, a hospitalization client, okay, we also pay for hospitalization costs. We also recently launched 2 products, okay, SecureLink and Protect 88, which if the customer or policyholder suffer from diagnosed from having a COVID-19, we also pay them 10,000 cash relief. And unfortunate thing happen if the policyholders die from COVID-19, we also pay extra 50% death benefit, but kept at 100,000. So those are the things that we do, okay, as a company, because we understand, okay, this time is a very challenging time, and people are suffering from COVID. So we just want to play our role and contribute back to the society.
Okay. There's another question. Thank you, Paul. There was another question as well. If on medical, what are the key features? I think this is a question by Suyin. What are some of the key features should we be looking for in our medical insurance policies? I mean, I think the complaint is that policies can be pretty difficult to understand for the layman, but what are the key, if you want to take out a medical insurance policy, what are the key features that you really need to look out for? Key elements of coverage, Paul.
Okay, the key element coverage, okay, it depends on what I mean, okay, for medical product, okay, it covers hospitalization, okay, room and board, all right, those major illnesses. So you have, because different companies, they offer different so-called product features. So you have to know first, okay, what do you want, okay, what kind of policy that you want, okay. You can buy a critical illnesses policy, you can buy a medical, hospitalization policy, or for those who are actually with the company, you can enroll with the company under the so-called employer benefit policies also. So it depends, okay. But most of the companies, they cover major illnesses, okay, in hospital, out hospital, so-called outpatient, inpatient. So those are the things that you have to pay attention to.
Okay. What about things like I think sometimes companies put in things like annual limits, lifetime limits. How important are these things? What kind of annual limit should someone be looking out for given the current medical costs that we have today?
It all boils down to the premium cost. Okay, if you desire to have let's say higher annual limits or lifetime limit, the medical premium, okay, the policy premium will be higher. And some of the, I think now it is very common, okay, that you have like 2 million ringgit annual limits. And some policy only have like 300,000 or even 150,000, depends on the premium that you pay. So, and also the room and board, okay, now what kind of, do you want single room or twin sharing or, so all this, it boils down to, how much premium you want to pay. Then you will, if you pay high premium, definitely you will get, higher so-called coverage.
Yeah. Okay. And I guess, I always, when I visit insurance sites, there's always like a grid. There's a grid table that has all the features on one side and the limits on the other. And I guess, Suyin, you have to look at that grid. Unfortunately, it's something that you have to look at your preferences. I guess, but at the end of the day, there's no point buying all this high annual limits and all that if you can't afford it, right? At the end of the day, it's how much you can afford, and then take the one that you can afford, right? And that fits your needs. Take the afford. Okay, great. We also have another question by Emily Gedius. When one have, she has sufficient medical insurance, she has life insurance, PA, but now I guess a lot of people are concerned about critical illness, particularly cancer, right? I think everyone hears about cancer, but there's also diabetes, there's also other kind of critical illness. And she is considering buying early critical illness insurance coverage. She was quite shocked to get quotes. When she got quotes, she says for early CI, the premiums were really, really expensive. Is there a reason? I mean, obviously there's a reason for this. Paul, can you elaborate?
For early CI, because normally if a person is diagnosed with this critical illness, then the company will pay out the benefit, okay, instead of waiting until the last stage, okay, before the person is dying, okay. So we will pay out the benefit, okay, so that the person can get treatment at the early stage. That's why the premium is a little bit higher. Yeah.
Okay. All right. So those are the questions so far from Facebook. Over to you, back over to you, Roshan.
Yeah, Kevin, I think you had a point you wanted to raise earlier. Do you want to bring it up now?
Sure. Thanks. I just want to go back to the grid that Malek was saying. So, when we buy medical insurance, I think things like annual limit, lifetime limit, these are things that definitely consumer will have asked the person who is arranging for the application. Therefore, these are things that consumer usually are well informed. But when you get the contract or the policy booklet, how many consumers actually take the effort to go through the terms and conditions? If you actually do that, it's not as difficult or complicated as we think. It's actually simple English that you can understand if you put some effort to go through it. And as far as medical insurance is concerned, that not commonly mentioned. For example, we know room and board, for example, 300 per day, but you may not know that there's a small form in the bracket, how many days per year is maximum. For example, for certain company, 120 days a year, that's the limit. So even if you stay in the room within your limit, let's say below 300 per day, but if you are staying for the day 121, that one day onwards is all not covered anymore. because it's 120 days. So another company may have 150 days per disability. That means for the same disease or for your whole life for this disease. So you have to read about all these fine prints. It's more important than the annual limits.
I think another point, I guess, is the difference between annual and lifetime limits, right? Because sometimes lifetime limits can look very large, and what you don't realize is that it's for the lifetime, whereas annual limits kind of refresh on a yearly basis. Is there, Kevin, from your experience in dealing with clients, is there anything in particular that people often miss when they're looking at medical insurance before we move on to other things?
Most commonly, it will be those things like, for example, the number of days limit per year. Sometimes your number of days per year is 120 days, but for ICU, they may have a separate number of days limit. So you may have 180 days per year, but only less than 80 days for ICU. So if you never review that, when you find out, you are really in for a shock, because these are things that you could have understood earlier. But if you only found out it a few years later, it would have been too late for you to make any remedy or changes already.
Yeah, I think these are some of the things, right? Because there's so many components going into medical insurance, whether it's the room you stay in, how long you're covered for. Malek, you want to highlight something?
I think Paul has something on.
Do you want to bring up something?
Again, Paul?
Yeah, one point I just want to raise, okay, is that most employees, or they have so-called group medical insurance, okay, but it's very important for them to also own their own personal medical insurance, because they thought they have this group medical insurance that will last them forever. But once you are not employed, or once you retire, and when they get older, you try to get a medical insurance will be very difficult. So if you can afford it, I will encourage that you will purchase your own personal medical insurance.
Yeah. Paul, have you ever heard of situations or products where the employer insurance is portable, meaning it can be passed on? Are there products like that out there?
Yes, in fact, within Maybank Group, we do have a product. If you're a Maybank employee or Etiqa employee, if you buy the product, then upon retirement, you can carry the product with you, even after retirement. Yeah.
After resignation? After resignation, can you do that?
It's upon retirement.
All right.
Yeah. But some product we do upon resignation that you can still portable. I do encounter one employer that offered that. So it can be considered. Yeah.
Okay. So it's something for, I guess, employers to look at. I think if employers, it's important if you care about your employees and their future well-being, not just at the company, but just on their own, to look out for maybe some of these products which have portability, right?
Yes. Yes.
Okay. There's a very sophisticated question here, which even for me, I'm like, ooh, I don't understand this, but I think maybe you guys experience. So how about turning? This is about sort of what can you do when your policy, when you are sort of this hierarchy of desperation. It says here, how about turning your policy into a paid up policy?
Yeah, it can be done.
Okay, what is the paid up policy? Well,
a payout policy means, let's say if your cash value, let's say is like 20,000, take example, right? So you can, sum assured, let's say is 200,000. Now with the 20,000 cash value, how much insurance you can buy? And then you do not have to pay anymore. So it's called payout insurance. So with the 20,000 cash value in your policy, you may be able to buy 20,000 sum assured of debt protection. So then, you use that to buy a pay-up policy, and the policy will last until the person is, or until the policy matures.
Oh, I see. So basically you use the cash value to pay all the premiums that's associated with protection.
Yeah, but then your sum assured will reduce, let's say from 200,000 to 20,000. Yeah.
Okay, got it. Right, because because you don't have enough for 200,000, right? So okay.
Yeah.
Right, that's great. Roshan, over to you.
All right. There's another question here, I think from Harry Chung, which is, I'm going to direct directly at Kevin, since it's about term life versus whole life insurance. Kevin is the only licensed financial planner here. What would your advice be if someone was looking at higher protection? between term life and whole life insurance? Maybe you could highlight some of the key differences between the two.
I would say that on the surface, definitely whole life insurance will cost you way more if you're looking for protection in comparison to term life. That one, I guess you 10 times out of 10, you will find that this is true. All right. But if you're looking for a higher protection, it won't hurt if you get a comparison between some investment-linked product compared to the term life product you need, because you need to also get advice as per what are the purpose you need those coverage. If you need it more than 20 years, let's say, for example, 30 years, then maybe term life may cost you more over the long term. Therefore, getting a comparison first will probably be in the best interest for any person.
All right. So again, I think the underlying point is that there's no easy answer when it comes to this, right? I think oftentimes we want an easy solution to the problem, but when it comes to money, when it comes to protection, even investments for that matter, there are so many things so many details that need attention. So again, just going back to the medical insurance as a contained example, between whether it's day or how much you have for your staying at the hospital, is it annual cover, is it lifetime cover, what else can you do with that policy, what are the terms and conditions? These are all details that play into that. So it's very important to pay attention to the details, and that's the problem, right? It just sounds so overwhelming. Malek?
I'm coming back to Facebook again. Viv Adram, I have a question about service from insurance agents. I understand agents only earn from clients the first few years of them buying policy. After that, they don't. She had an experience where her agent stopped being attentive after 5 years or more. What can I do as a customer? Moving to another agent doesn't make sense for me, as I think this person won't earn from this partnership, right? I think this person won't earn from the existing insurance policy that she has. What do you advise for someone like that, Kevin?
In this case, I'll say as a customer, looks like you are stuck there, but you can still receive service from the insurance company, customer service. And also nowadays, there's also customer lock-in portal. There are some certain simple servicing function that we can perform by ourselves through this internet portal. And another thing is that while we may believe that after 5 years, the insurance consultant will fade off a little bit, but let's also ask ourselves, have we tried to contact this person, or we just leave a couple of text messages and then we just make a conclusion that this person is no longer interested in servicing me. And therefore, some people, they are taking a revenge by surrendering their policy. But at the end of the day, you are hurting yourself. You are not getting a revenge at all. So you have to really be rational when it comes to this kind of thing. And if you met with someone who is really passionate about doing this work, they don't mind taking over your servicing as well, because at the end of the day, if we believe that your need for life insurance is not static. If you have new life status, new responsibility, that's perhaps a chance that you will become the customer that provide some revenue for this new servicing agent as well. So all in all, just don't make your own conclusion. Seek out help if you need to. Yeah.
So I guess for Viv, not everyone is transactional. There are people out there that will still service you, will still provide service to you because they just want to, and it doesn't matter that they don't have any more commission from that policy. Paul, how in that sense, do you come across situations like this where customers come directly to you and say, hey, my agent's not servicing me anymore, but you're the insurance company, I need some help. Do you get this sort of situations a lot, or do you find that agents really do fulfill their part of the bargain all the time?
We do come across once in a while. Okay, I mean, the agent left the industry, and then nobody's servicing them. But normally, what companies do, okay, we do assign an agent to service the policyholders. Yeah. So if not, then we will definitely follow up. Okay, it's what Kevin said. Okay, we have customer service, live chat, a lot of so-called online portal which you are able to access, okay, for information. But what we normally do, okay, at Etiqa, okay, if let's say if the policyholder, there's no agent servicing, we will assign the policyholder with the new agents.
Okay, great, fantastic. Thank you, Roshan.
All right, I think we're about ready to wrap up unless there are any other questions that are coming in. So now that I've asked for more questions, let's just go maybe whether, let's say, so some closing remarks here. I think when we take a look, so I think some of the options that we've covered, I think we've talked about whether COVID-19 coverage is out there. And then I think Paul addressed that a little bit. And really, when it comes to the question of when or should you surrender your insurance policy, it's a series of steps, and essentially it's the last thing, or at least in this situation, the last thing that you want to do. And even when it comes to that, there are different policies that you might want to take a look at before you get to the big ones on your list. And as long as I don't see any questions that have come in.
So I think, just to summarize, I think from both our panelists, thank you very much. I think what they're saying is that surrendering your insurance policies is probably the last, one of the last things you should do. But it is, if things are, if things are really, really tough, that it is possible. But I think make sure that, I guess there are a few steps that you make sure that you understand what you are surrendering, what are the, and try not to lose the protection part of things. If in doubt, talk to a financial planner. Be frank. They say, look, this is not like I'm not in a situation where I'm in investing mode. I can pay you a lot of fees. Be frank about what you can afford to pay them, or or make an arrangement. But do get some, maybe get some advice as to how to restructure your policies. There are probably many things that you can do, as I say, like Paul said, deferment of premium one. Secondly, there's also loans on that loan, a premium loan from the insurance company. So those are things that you can do in intermediate. But if you need to review your policies, there's also that option. But do it with someone who can help you really understand what you're sacrificing and what you're keeping. So I think that's pretty much it. Roshan.
Right, and on that note, I'd like to thank all three of you for joining me today, and everyone at home for taking the time to join us this evening. Please let us know what you thought about the webinar, and actually this timing, because it's been 2 weeks since we've been doing it at 8 p.m. Let us know what you think about all of that. To the three of you, thank you so much for joining me today. BFM's next webinar is happening on Friday, August 21st at 12 p.m. on the Facebook Live page, exactly where you are right now. And we're taking a look at how do I see a doctor now? And this is really addressing the situation in this COVID-19 pandemic. How do you go see a doctor? What are your other options if it's not a face-to-face meet? Thank you all for joining us. And gentlemen, good night.
Thank you.